Hi, and welcome to 2026. This is Mitch Argon with Conversely Realty. I'm going to take you through the Reno Tahoe real estate market in just a few minutes. Okay, let's jump right in. Hope you had a nice holiday season. Let's take a look at 2026. I'm going to focus this month on the standard monthly reports and then some annual perspective. So I'm going to go through this monthly information a little quicker. Not a lot of change. The trend that we've been seeing month by month continues. You can see the numbers in through here. You can see them visually there in terms of how median price is performing over the last 24 months. Relatively flat. Had a strong December in terms of months homes sold over and through here, with the exception of Carson City, which is encouraging. And of course, we're still over in our markets, with the exception of Tahoe, we're well below the threshold for a neutral market. So we are still in seller market territory by the metrics. Inventory, modest changes. This shows you the last 2 years. You can see that from 2 years ago to 1 year ago, we have a slightly higher increase in inventory, going from about, and looking at the Reno market, from 400 to 500, about a 20% increase. And then this year, or last year, that is, from January of 2025 to December 2025 or January 2026, we saw about a 10% increase. So the rate of growth in our inventory is slowing on a year-over-year basis. I'm using Reno as a bellwether market here, but you can look at any individual market here. 20% rise in 2024, 10% rise in 2025. We are still low on inventory, which we'll talk about in just a little bit. Month supply of homes, as you can see, is down. Kind of a seasonal adjustment you see as well. But we're still, very much a tight market, which for the most part favors sellers, although we are seeing buyers becoming much more discriminating. They're not willing to just take whatever is left as a second place or third place in the marketplace like they were in 2020, 2021. So the homes need to showcase well, because there's a little more competition and the buyers are a little more discriminating. So I cleaned this chart up from last year. I eliminated a number of years in here. We only have now 2019, which is this large orange line here, and then 2024, 2025, and 2026. And this is the single family home inventory across the region, as mentioned here, these markets. So here is this dot here is January of 2026, 1,085. January of 2019 was 1,457. So we're closer to 2025 than we are 2024, but we're a little bit lower than 2025. We'll watch this as the months tick by this year. If our inventory remains lower than that 2019 level, we probably won't see a whole lot of movement in pricing. If we see this inventory this year cross this 2019 level and start to rise in a meaningful way, like maybe 20% or more, that will start to put more pressure downward on pricing. So we'll just see what happens. I'll keep you posted as we go by month in the coming 2026 calendar year. Okay, I want to spend just a little bit of time going over some multi-year perspectives, since it is January and we just finished 2025 and we're looking forward to 2026. So a few things to share with you, and I want to go back. These reports that I referenced go back to 2002. So we've got a pretty large collection of data and charts to look at. And I wanted to draw your attention to the trend that we saw during the Great Recession. This is the number of units sold on an annualized basis. And you can see that the units sold went down. I'm using Reno as a bellwether, but all these markets adjust in different ways, but this is where we have the largest amount of data. So I think it makes sense to showcase it. So we went from a high in terms of homes sold back in 2005 to a low in 2007. It was a 42% drop in the number of homes that were sold between 2005 and 2007. A very, very sharp drop in the market during the recession. We've seen our number of homes sold drop more recently as well. So if I go back to 2020 to 2023, we saw a 34% drop. So not quite as big as this 42% drop. Of course, if I had gone back to 2017, we're a little bit higher. That'd be a steeper drop. But nonetheless, a very significant drop in the number of homes sold. This is a direct result of lack of inventory and this lock-in effect that we have where people don't want to sell homes because they don't want to trade off their 3% mortgage for a 6% plus, or in some cases where we were a year ago, 7% plus mortgage interest rate. So 42% decline here, 34% decline here. Let's see what has happened with pricing given these same steep declines in number of units sold in the marketplace. Great Recession, home prices fell, and this is the Reno market, from the top to the bottom by 55%, which is what you would expect when a market slows like that. But the market that we're coming out of now is very, very different. Even though the number of homes sold has dropped substantially, as I showed on the prior slide, we've actually seen a slight increase in median price, and I'm looking at Reno specifically, by about 6%, going back from 2022 to 2025. Now, 2022, the median, we did hit a median price in a single month in 2022 of 635, I believe. And the median price for 2025 was 630. So when you hear me say these markets have been essentially flat for the last 3 years, they really have. Even though you've seen some changes here on the annual numbers, we've been floating around in that probably 630 to maybe 660 range on a monthly basis since the midpoint of 2022 when rates started to rise. So a very different picture is told here with regards to, if I go back one slide, the drop in number of homes sold, which is material in both cases compared to what's happened with pricing. And that's what this is the direct result of this lock-in effect. So I thought I'd share this with you. It gives you a viewpoint and a recent memory reference point to the Great Recession and what we saw and what we're seeing now in our post-COVID kind of what I'll call market slump with regards to number of homes sold. Okay, what I want to do now is take you through an article that I recently read earlier this month. It was published by Realtor.com, and it's available online. The URL is down below here. And the title of this article was, "What would it take to make housing affordable again in 2026?" So this article is looking at things on a national basis. We just saw some local data that I shared with you, but we're talking about a national basis right now, although our market is, in many cases, in line with what's happening on a national basis. So let's take a look and see what they have to say. What would it take to make homes affordable in 2026 or again in 2026? So the basis of this article, which you can read, is that to move the percent of income for housing, household income spent on housing, from 30% plus, which is where it's at now, to 21%, which is where it was in 2019, not that long ago, what would it take? So they cite three different drivers or three different factors. And it could be any one of these things, or it could be some combination of these three things. But any one of these things on its own would bring affordability back down to 2019 levels, or 21%, based on their research. The first one is mortgage rates falling to 2.65%. We're currently just above 6%, and this is highly unlikely to happen, perhaps in decades, but it's certainly not going to happen again in 2026. So we probably will see rates come down a bit, somewhere in the fives, but we're not going to get anywhere near this 2.65%. So that's not a good option for us. Income's rising 56% to a new median of 132K, up from 84K, which is the current annual household median income. Well, incomes don't rise that fast, and so this is highly unlikely as well. We're not going to see incomes rise 56% in 1 year, right? They may do that in 10 years, but not in 1 year. The third is home prices falling 35% to a new median of 273, again, a national number, down from the current median price of 418. Well, this is happening. You're seeing prices falling in some markets, as we talked about in prior months: Florida, Texas, Arizona, Atlanta, the Georgia market, and so forth. But to see home prices fall 35% in a single year, that is a very steep decline, as we just saw looking at some of our historical national numbers. Based on my experience over the last 20 plus years, if home prices were to fall 35%, it would probably take about 2 to 3 years for that to play out, just based on the way these markets behave and function. So that is probably not likely to happen in 2026 either. So we may see some movement on all three of these fronts in 2026, but I don't think we're going to see anywhere nearly enough movement in any one of these areas or some combination of these areas to bring that level back to 21% of household income, which was 2019. So I take a quick look at what this looks like visually, and you can take a look at this chart. You can pause the video. This is published in the article as well, and it shows the percentage of household income to qualify for a loan and pay for a home at the median price and so forth, that you can read down below. If you look over here, here we have the COVID rise from 2020 up until 2023 approximately. We've seen a little bit of relief just in the last quarter, but not very much. We're still well above that 30% threshold. And you can see that we were down in the sub 20% range as early as 2019. Going back when the recession was in effect, coming back in through here, it got very low, down in the mid to high teens. So I thought this was interesting perspective. And this really resonated with me in terms of what we're seeing in our market and how slow the market is to correct. So I wanted to just share with you a couple of things that I'm looking at for 2026 that I would see here. We're going to hear a lot about affordability. So I just did a twist on location to affordability. There's a number of things that have been floated around by the federal government to try to improve affordability. We'll see what happens, what sticks. But I think that this problem is more than a single year problem. So we'll be dealing with this for more than 2026. Interest rates have lowered into the low 5% range. I don't believe will materially affect the market. That's going to bring a little more buyer activity back in the marketplace. It may put a little bit of upward pressure on pricing, actually, even though affordability gets better. And I don't think a 5% or 5.25% rate is going to be enough to get someone to move off of a 3% or a 2.85% rate, which is where many of them are right now. So we'll see how that plays out. I think that home values will be steady, like they have been largely for the last 3 years, with more of a potential for a slight decline than any increase. Again, coming back to this affordability factor, seeing possibly some inventory build and putting a little more pressure on home sellers to be competitive and possibly to adjust prices where they need to. With regards to home sales volume, I'm forecasting that will be slightly higher in 2026 over 2025, but still low by recent pre-pandemic measures. And I showed you those charts a moment ago on number of homes sold. I don't think we're going to see a major change there, but I think probably see a little more movement. But we're still going to be in a market very much like we were, I believe, in 2025. So those are some thoughts to share with you. Hope that gives you something to think about and give you some perspective on not only our local market, but some national perspective from the realtor.com article. I hope this has been useful for you. Thank you for watching. If you have any questions, please feel free to reach out to me or one of our Calneva Realty agents in our Reno or Carson Valley office who you may be working with. If you have a comment, please leave it below. And of course, the market report where this data is coming from is down below in the link from this YouTube video. Thanks for watching. We'll see you next month. Have a great day.